Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 9th of February 2017, presented by myself, Phil Carr, at the Gold and Silver Club. Today we will be going over the following. We will be covering live market analysis. We will provide you with a watch list of trading opportunities, a forecast of where we expect gold, silver, oil to head next. We'll be answering questions, and also we will be covering our top trades of the week as well. As always, we will keep it very interactive. If there are any questions, contributions, please feel free to put those into the chat function. So let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times. Of course, it's a pleasure to be here today on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website at www.thegollandsilverclub.com. So today, before we get into the charts and start to have a look at gold and oil and some of the other markets as well, just want to give you a quick overview of how commodities have performed so far in 2017. In fact, at the moment, commodities are outperforming all other asset classes. We've seen palladium so far this year is up over 13%. Platinum is up also over 13%. Silver has had a very strong month. Silver now up over 11% in 2017. Gold up just under 8%. Sugar up just under 7%. Copper up 6%. Wheat up 5%. Coffee up 5%, soybeans up 5%, corn just under 5% gain so far this year. So you get the picture. At the moment, it has been a very strong start to 2017 for commodities, especially the metals. Platinum, palladium, gold, silver have also all had very significant gains so far this year. So with that said, what we'll do, we'll go over to the charts. Any questions or comments, feel free to keep those coming. We will start off with gold. We went into gold in a lot of detail last week, what we projected as the next levels for gold. Our ultimate target at the moment on gold right now, we've got two separate levels that we're looking at. One of those is sat at 1,248 US dollars per ounce. And the next level above that is where we would meet the 200-day moving average, which is a moving target at the moment. And it's currently sitting at 1,264 US dollars. So you might recall last week where we discussed that we had a very important level of resistance that essentially gold needed to take out. It needed to break above 1,219 US dollars per ounce, but not just break above it. We also needed to see a close above that level. And in fact, into the close on Friday, we did get a close above that level. It was the highest close that gold has had in 2 months. And then this week, we've had the follow through that we've ultimately been looking for here. So gold is currently broken out to 2.5-month highs. You can see here the V-shaped reversal pattern from last week has played out perfectly. We've broken up above this major level of resistance. And in fact, the next major level that we needed to break through on the close on Tuesday was 1,237 US dollars per ounce. And what we're looking at the moment, gold's currently trading at 1,240. We've got a position on, as mentioned before, at 1,200, where we've re-entered into this trade after taking advantage of the breakdown at the end of December, getting in at 1,146 US dollars for the 700-point move back up towards resistance. And then we got out of that. And then we re-entered again last week when we had a dip just below, or just above actually, the 50-day moving average. We had confirmation to get back in at 1,200. So currently, our trade sits at 400 points in profit on gold. What do we expect next? So I'll give you our forecast at the moment, what we're anticipating in the next few days. Now, between now and the end of the week, we're allowing for a potential blow off top here on gold. What does that mean? It means that we have the potential for gold to come up, hit our profit target, which is sitting at 1248 currently, and potentially follow through above that level, coming up to the 200-day moving average, which is at 1265, which is where I would see the potential for gold to get to if it can follow through over the next couple of days. Now, I'm looking at that short term, and I'm also looking for a potential for a short-term top to be formed on gold between now and the end of the week. As we go into next week, I think the overall price structure could start to change. We could get a short-term pullback, especially if we do break out to either 1250 or 1265. I suspect short term that could be a temporary high for gold, and we might get a corrective move after that. So we're watching this very closely. Also be aware that during the beginning of this move at the end of December over January, we saw a lot of the follow through was happening overnight during the Asia Pacific session. So we were seeing buying over that session, good follow through, and that was the case when gold was quite cheap. So when it was back at relative to where the price is now. So when the price was sitting around 1120 up until 1200, we were seeing a lot of buying overnight. That has completely stopped. We're getting very little in the way of follow through during the Asia Pacific session. We're seeing most of the gains actually occur during the US session, which of course we're moving into at the moment, 2 o'clock London time, but the US session has started in America. And at this point is normally where we would expect some sort of follow through. Day to day, we're seeing gold move within about 100 to 150 point range. We're currently sitting at 1240. So far, very little movement on gold today. It would only take another 100-point breakout, or actually an 80-point breakout from where we are at the moment, to hit the 50% Fibonacci level, which is taking into account the swing high after Brexit, the swing low after the December FOMC statement. That would be the key level that we're looking at next. Why are we looking at that set of Fibonacci levels? Because there's a few different levels that you could plot. The reason being is most traders on gold are looking at that level. You can note that because if you have a look at where the 38.2 level is, that's at 1219, where very clearly we have come into resistance. We came into resistance 4 times at that level. And also underlying support was also at the 23.6 fib level here. And you can see here where that has just been shy of the 50-day moving average. That's been important as well. So I do suspect that we're going to get some overhead resistance at the 1248 level. If we do break above that level, and that's also a previous level of support, going back to major zones actually prior to Brexit, 1250 was important. It was important back in October. It held and the price rallied just prior to the election, the US election. The 1250 zone was important. I suspect that's going to be a quite an important zone here where it could provide resistance, but a breakout above that zone, there's free or clean air, I should say, up until the 200 MA, which is currently sitting at 1264. Why do we think potentially gold could go as far as that? Well, you want to have a look at some of the leading markets at the moment, which have been leading this move. So this is gold versus the euro. Okay, so gold versus the euro, and I've annotated this chart a little bit here because I'm looking at some price structures moving forward. But gold against the euro broke above the 200-day moving average earlier on this week. It had quite a significant pop. It's broken out of a major overhead trend channel as well. And gold versus the euro has been leading gold versus the US dollar by 1 to 2 days now for about the last 6 months or so. And it's definitely worth being aware of this, especially at the beginning of the year. We saw gold versus the euro break out first. Also at the start of this week, gold versus euro broke out first, had the much larger move. The end of last week, beginning of this week, we've seen a breakout of this major overhead trend channel. That was really a make or break zone actually for gold against the euro. It came against the upper end of the trend channel, also the 100-day moving average, but it had a significant pop, hit the 200-day moving average, and now we're coming into a little bit of resistance at this point in time where I'm looking for a blow off top at the moment. And you can see there from my forecast, I'm looking essentially either today or tomorrow to hit a short-term high for gold, gold versus the euro, gold versus the US dollar, then retrace back down. It's not going, I'm not expecting it to be a huge correction, but at least we might be overdue a correction from an overbought condition that we're in on both gold against the US dollar and gold against the euro at the moment. So I'm giving gold the best possible chance at this point in time to potentially hit 1250, 1248 to 1250. Might get a blow off top here if we get a break beyond that level between now and the close tomorrow. Okay, so we're targeting between that zone and also the 200 MA. If it's a failed move from this zone, if it just consolidates, and ultimately, if we don't go any higher than the 1240 zone at the moment and we see it start to roll over and close back below the previous day's lows, we'll also look to exit and come out of this position short term and then re-enter. Potentially, we'll re-enter on the next pullback, or we'll look and we'll be neutral initially if once we exit this position, because we are getting into a short-term overbought condition. Would we go short gold, therefore, if our view is that we would essentially be looking for a short-term top to come into this market. I wouldn't rule it out. At this point, I wouldn't rule it out, but also I'm looking at the potential to go long the US dollar. So we wouldn't, ideally, we don't want to be doing exactly the same thing. We don't want to go short gold and long the US dollar. It's a very similar trade. So we'd look to do one or the other. And the US dollar index at the moment, you can see it's been breaking out, closes above the previous day's high and closes above the previous closes. Got support the 100-day moving average, also the 38.2 Fibonacci retracement level. It's building up a bit of a base here. You've got a trend channel and around the 21-day moving average. We've got some overhead resistance. I'm watching this to see if slowly but surely we're going to break out of this trend channel. For me, it's not confirmed yet. The US dollar hasn't had enough momentum to really breach above this zone of resistance. There's not a great deal of scheduled news items which are high impact now between now and the end of this week. So possibly we won't get the move this week, but next week is where I'm anticipating a potential breakout on the US dollar if it can follow through from this recent attempt to break above the trend channel here. So I could see that then restarting the upward trend short term. So that's just something to bear in mind at the moment. So gold right now, I think overall momentum is on the side of the bulls. The bulls definitely have the technical advantage here. There's no real reason why gold should sell off significantly at this point, other than it's in an overbought condition. Momentum is on the side of the buyers right now, but I'll just be careful, especially if you're looking to enter fresh positions at the moment. Just be aware that soon we could get into quite a significantly overbought condition with gold if we retest the 200 MA or the 1250 to the 1270 zone, and then we'll need to reassess. At that point in time, it really does depend also on fundamentals, what else is going on in the markets, what potential executive orders Trump has put in place as well. That's a bit of a wild card at the moment too. Certainly we've seen that being a catalyst recently over the last couple of weeks. Trump has had a big impact on gold, creating uncertainty in the markets with the sell-off of the US dollar as well, just going back about a week and a half ago. So with that, we'll watch this very closely, but that's our overall forecast at the moment. Short term, expecting more upside with gold. The window of this to happen is between now and the close tomorrow. As we go into next week, I am potentially looking for an overbought condition to arise with gold and then a turnaround in price short term, but we'll continue to monitor that. Now, oil also is worth bearing in mind the overall price structure at the moment. Oil's been really interesting over the last week. We essentially got a breakdown of a bull flag formation that we've identified on this market. We got that at the beginning of the week, and we've had several attempts on oil to break out from overhead resistance around the 54.50 zone, or 54.63 to be precise on that level. And into the close on Friday was actually one of the highest closes that oil has had in 2017, but it was unable to follow through, which was a surprise that we didn't see any follow through. There's a lot of buyers in this market at the moment, but it's getting a bit heavy on the buy side, a bit exhausted in terms of the COP report. So the commitment of traders, the amount of traders that are long oil right now is at record highs, and we're still not seeing the follow through that you would expect on a market that has that sort of position on it. So what it tells me is there's no buyers left really at this point to take oil considerably higher. We've recently in the last couple of days broken back below support, broke below the 50 MA, but then only temporarily closed back above it yesterday. Well, actually we closed right on the 50-day moving average yesterday, and today we've broken back above it. But we've got a previous resistance, a previous support channel, trend channel, which could turn into resistance. It really does depend on the close today and how oil closes the week. I could still see this going in either direction. Overall price structure does favor the bears at the moment. The bears have only just got this right now in terms of sellers have the technical advantage. But if we were to get more follow through today, and if we see oil essentially close near the daily highs, and if it gets back above the highs from Wednesday, it could have another retest above at the 54.50 zone here, and then possibly on another retest of that, it might be able to breach that level of resistance. Now, if we go over to a weekly chart, look at the consolidation on this. It's been 5 weeks now, and actually on a closing basis, we haven't had a close above $54.60 now, going back to the beginning of December, and we haven't had a close below this level of support either, the 51 level either, since December 2. So we're really very much range bound. There's only really small short-term opportunities in oil right now. Buy off support, sell off resistance. You can take shorter term trades based on lower time frames, but other than that, oil is not doing a whole lot here other than moving sideways. So today will be important. We'll see whether we do get additional follow through into the close. If it just sells off again and produces an inverse hammer and breaks back down and closes below the 50-day moving average, I would say that's got more chance to break down again. Sell short side, what am I looking at in terms of levels? I'm looking at a retest of $50 per barrel. If we do get a breakdown lower, that will just be a key psychological zone, and also we'll meet one of the Fibonacci levels as well around that level. On follow through, if oil was to have a sustained breakout and be able to close above $55 per barrel, I would look for a revisit towards the upper end of this zone, and actually would look to get a breakout towards $57 to $60 per barrel if it can close above resistance. You've got on a weekly chart basis, that's what I would look at for the confirmations here. We've had a failed move to the upside several occasions, but also failed move on oil to break down as well. It's really tight, this range at the moment. So right now, continuing to watch this and just need to be patient. Don't get too tired out, because once we will get a confirmation, either a break of support and a close below, or a break of resistance and a close above, this will likely develop into quite a lucrative trading opportunity. So definitely just keep that on your radar at the moment, the fact where oil is range bound right now, and those key levels that we're looking at the moment. Today's close will definitely be important for oil to just get an idea of which way this market is going to go. But right now, it's just range bound, moving between $51.50 a barrel up to $54.50 per barrel on the resistance zone. So it's about a 300 point zone of support and resistance that we're just tending to ricochet between at the moment. Also, just to give you an idea of how the top performers are so far, palladium at this point in time has broken back above its resistance zone over the last couple of weeks here. Palladium and platinum being the best performing markets now in 2017. So palladium, after its retracement about a week and a half ago back towards the lower end of its trend channel, revisit of the 50 MA is slowly but surely managed to build up again momentum to the upside. It's not too far away from the 2017 highs. And if we go over also platinum, we've taken advantage of this move over the last week and a half. We've just had a revisit the lower end of the trend channel here. Every pullback has been an opportunity to re-enter into platinum so far in 2017, since it broke out at the end of December, where we formed the pennant formation that essentially popped to the upside, and we've continued to see breakouts and a surge higher. In fact, platinum right now is just about breaching above the swing highs from November. So we're now at 3-month highs here. Platinum's just doing that right now. What does that mean? Well, platinum breaking out like that, the fact that gold versus the euro is still managing to keep up some momentum to the upside here at the moment. And also, if we go over to the US dollar index, which is struggling a little bit of a doji, nothing too much really happening on the US dollar today, although it has just created a zone of indecision here at the moment. It has broken out of one of its first overhead trend channels, but it's a little bit indecisive right now. I still believe there's enough momentum on the side of the bulls here for gold to be able to take this market higher before it goes lower. There you go. Look at that, 1241. This is about right. It's 2 o'clock in 2:20 in the afternoon UK time at the moment. US session is getting underway. This is normally when gold starts to follow through. Each day between approximately 2 o'clock to 4:30 London time is when gold ramps up during the US session, and we get that sort of usual move of where oil moves between gold moves approximately between about 100 to 150 points per day at the moment. So I'm still looking at 1248 as the short-term target, and above that on a runaway move and a potential blow-off top, I'm looking for a revisit of 1265, which will revisit the 200-day moving average. Okay, so that's essentially what we're looking for at the moment on the metals and also on oil too. So I hope that helps, just to give you a little bit more insight for those of you who trade these markets. Also, of course, if you'd like to be kept updated on our specific entries, exit, take profits, we share all of our entries with all of our members at the Gold and Silver Club. It's very transparent. We provide all of our exact trade management, entry, exit, take profit. If you're not making money in commodities at the moment, considering the year that we've had so far, you absolutely should be. You definitely don't want to miss out on the opportunities that we've got at this point in time. So I'll just talk you through some of the top trades that we've had over the last week, our portfolio performance using our exclusive research-driven strategy. So first of all, as I've just mentioned, gold, we've got an open position on gold at the moment, and we haven't banked the profit on this yet because we're still looking for more upside. But if we banked right now, we'd have 400 points profit. We got back in at 1200. It's currently in 400 points of profit. I'm looking towards the 1248 to 1265 zone as the next level to get out of this trade and exit. Natural gas, we took advantage of a sell short opportunity over the last week and a half. Very clear signal to sell back into this. Took it back down to the lower end of the trend channel for 340 points profit. And of course, also just capitalized on the breakout with platinum here, where platinum just had a revisit of support, produced another buying opportunity, nice rejection candle of previous level of resistance turn support, and we just capitalized on a 360 point trade on platinum as well. So if you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, you can get exclusive access to our private members live trading room, and all of our trade setups, our alerts, our updates, trade management, all of the positions we are getting into. All you need to do is make an application to www.jointhegoldsandsilverclub.com. Once you complete the application form, we will, of course, get in touch with you ASAP. Again, that is www.jointhegoldsandsilverclub.com. Okay, so just to break it down for you, in terms of who's it for, well, it's for newer traders looking to develop a solid understanding of the markets and really fast track your results. But if you are an experienced trader and you're looking to take your trading just to that next level, the private members live trading room is also definitely for you. It includes the following. You get our trading strategies and our online training course as well. You get exclusive weekly live trading room webinars and recordings of every single session. You get live trade setups ready to implement. We telegraph to you the exact trades, entry, exit, take profit, trade management, real-time notification sent out via SMS and email. You get the inside track, a week ahead trading plan with a watch list of all of our trades for the week ahead, VIP support and mentoring directly from our senior traders, and access to our Private Traders Academy members website. So let me just break it down for you in terms of how that works. We run our live trading rooms during the week, okay? And the Gold and Silver Club expert traders go through the markets, commodities, the positions that we're in, new trades that we're taking, fundamentals, research, how to get an edge in the market, exact entry, exit, take profit, real-time notifications of when to get into trades. All of that is provided during the live trading rooms and also via our notifications. You get email alerts and SMS notifications letting you know when to enter a trade. That includes exact details of entry, exit, stop loss, take profit. You get our commodity research and market insights, which includes our proprietary trading research to help boost your win rate and ensure you're getting on the right side of every trade. So again, just in summary, guys, with being a member of the Gold and Silver Club, our live trading room program, all of our private members get access to our membership site, a lot of resources, which includes our 3 key trading strategies that you can learn. You can go through our online training course. You can get access to our live trading rooms throughout the week and also all of the recordings. You get live trade recommendations ready to implement. So we telegraph to you exactly what trades we're taking, entry, exit, take profit, real-time notifications, details of where we're entering, exiting, placing our stop loss and so forth. The inside track, a week ahead trading plan every single weekend to prepare you for the week ahead. VIP support and mentoring so you get all of your questions answered, and access to our Private Traders Academy membership website. So again, to make an application, guys, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, guys, I wish you, of course, successful trading, and I wish you all the best. Have a great day. I very much look forward to working with those of you who will be making an application to join us at the Gold and Silver Club. Any questions at all, just get in touch with us, and I wish you all a profitable day's trading. Okay, so thanks everybody, take care, and we'll speak to you real soon. Thanks, guys. Bye-bye.